Hello and good day. This is the daily gold analysis for February 16th. As we predicted in our analysis, after a liquidity sweep within a limited range, the price behaved accordingly. The consolidation that formed indicated a Ryan soldier strategy in the market and, as predicted, gave us a sell signal, which was within a limited target and a limited CP or continuation pattern. According to the prediction, right at the moment of the downward trend's behavior and within that consolidation range, we can enter a buy position with a limited target. The market is currently experiencing a short-term bullish correction, and it is anticipated that as liquidity decreases in the market, the price could move down from this area to collect liquidity on the sell side and enter a BPR, breaker block, or rejection block zone. Our first target is the BPR zone. If selling pressure increases in the market, the price could continue its downward trend to the 50% level within the rejection block. We can see that after collecting liquidity on the external side, the price seeks to rebalance the range. This is an internal range, which could move downward, and there is an imbalance zone here, according to the 1-hour timeframe analysis of the gold symbol. We can see the price movement, which after breaking the ascending channel is now pulling back to the bottom of the channel. There is an order block here, and if the price drops below the bullish candle, it could be accompanied by downward momentum and move lower. As a classic trading strategy, we can enter a sell position. We can set the target based on a 1-to-1, 1-to-2 risk-reward ratio, or at the swing low, and place the stop loss accordingly. But if we change the way the channel is drawn, we see that the channel hasn't actually been broken yet. And this could just be a short-term slide downward, after which the price may move upward again, so that it fills the area of a daily gap. With the increase in buying pressure in the market and rising liquidity, it can move toward the buy-side liquidity, enter the order block area at the identified level, and continue the bullish trend at the 50 level within the order block. We can do this. We can look for a sell position, set the stop loss behind the zone, and target the swing low within the market. If the price closes above the order block zone at the $5,130 level, it indicates buying pressure and the continuation of the bullish trend in the market. Also, traders who use the smart money and ICT style can utilize two indicators, Liquidity Finder or Liquidity Detection Trading Finder, as well as the smart money concept. They can identify liquidity zones, detect high importance fair value gaps, and recognize order blocks. And if the price reaches these zones, and after liquidity is collected, they can enter a sell or buy position in the market. Here we see the price moving upward. This forms a swing failure pattern strategy, and a buy-side liquidity is present here, which can attract the price toward itself, and after that, the price can be rejected from this zone. But with the confirmation of the RSI, we see a downward price movement accompanied by selling pressure, and the current outlook is bearish. Also, by analyzing the fundamental factors for Monday, the US and China markets are closed, and in China, it's the Chinese New Year week, during which the highest trading volumes for gold and silver are based on the Chinese market. With the Chinese market being closed, we need to see how the movement in the market will unfold. Of course, the main movement will happen on the day. We can actually say that today the US market is also closed, and this overlaps with the Chinese market, which could mean that the market may experience reduced liquidity, and we might not see significant volatility. Now, analyzing the 15-minute time frame of a symbol, gold using the ICT indicator and the TFLAB zone, the price movement, we can see in the Asian session that it moved downward. It entered the rejection block area that was set in the morning of the New York session, and ultimately, after a liquidity sweep, it corrected upward again and stopped within the FVG zone of the Asian session. If in the session, London is accompanied by selling pressure and ultimately only manages to pull back to the low of the Asian session, then in the New York session, it could be accompanied by a news-driven distribution move. But if in the London session, liquidity is collected towards the buy side and at the 50 level and closes above 50% of the Asian session's range, then in the London session, it can be accompanied by a bullish distribution move, leading to success and profit.